Hey guys, welcome back. Today it's Thursday, June 11, 2026, and what a day. This morning, producer price index inflation came in hot, jobless claims ticked higher, and energy inflation was still a major issue, and the entire tape flipped after Trump's Truth Social post because the market stopped pricing the possibility that the Iran operation could be winding down and the oil risk premium could start coming out of the market. And that's why this move was so important. It was not just like a hot PPI day, it was a hot PPI day where oil got hit, bonds rallied, small caps ripped, and QQQ exploded higher. But the real question for tomorrow is simple. Was this real institutional accumulation, or was this just a headline-driven squeeze into resistance? So let's break down what happened, what actually participated, some trades we took profits on today, and the exact spots where I would start taking the next leg higher a bit more serious. So quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more, and thank you to everybody who subscribed. I really appreciate it. So please could you leave a comment, subscribe. It makes making these videos worth it. I really appreciate that from everybody. So let's jump right into the indexes. So SPY closed up 1.72, or actually 1.7%, was up just a teeny bit more right before close there. When I started writing my script there, QQQ outperformed that by quite a bit, 3.38%. And yesterday you may have noticed that I was talking about the relative GEX between SPY and QQQ because they were both negative, but QQQ was showing much less negative GEX. So I said if any indice I was interested in looking at today, it would have been QQQ for that trade. And that really played out. And we could also have seen midday when the GEX shifted from negative to positive, QQQ just really launched right then. And of course, this was based largely on Trump's Truth Social posts. You can even see it in the timing, or if you were actively trading, you would have known that. And so let's look at IWM next. They were up 2.96%. The Dow was also up 1.82%. And then, of course, TLT, and it's still going in the after hours there, was 1.3%, which is amazing on a hot PPI day. And, of course, USO was down. And we could look at some other measures of oil as well if we look at the micro crude oil futures, but USO and that go in lockstep for the most part. And it closed down 4.07%. And so that's the last part was really a tell. I want to be pretty clear that this was a headline catalyst. The market didn't suddenly decide that hot inflation was bullish. The market responded to Trump's Truth Social post and started pricing a possible geopolitical de-escalation. And that is why USO dumped, that's why TLT rallied, and that's why QQQ and IWM squeezed so aggressively. If the market was only focused on hot inflation, both of those things shouldn't happen. So the read I take away from today is not that inflation stopped mattering, but the read is that geopolitical oil risk premiums, when it starts coming out of the tape, equities can look through that hot inflation print. And I think we've known that for a while, but it was very great to see that playing out. And, we've been calling out TLT for days now because that lack of a real dump in long bonds was one of the first signs that maybe the market was not treating this as a true rate shock regime. And TLT holding up while equities were under pressure was, quite a clue today. So now let's jump into the sectors here. And I don't want to go through every individual sector or pull them up, but you guys let me know if you want. But of course, it was green largely across the board there, except consumer staples as a group was getting hit for the most part, but that's not a surprise based on risk on coming back into the market today. But in general, technology was a clear leader, was up 3.7%. XLI was up 3.21%. Consumer discretionary was up 2.49%. Communication services were up. Where's my XLC? In fact, let me know if you guys prefer seeing these on the charts, and I can pull them up. I can pull up the X's, the State Street ETFs that represent each sector. Or if you'd actually just like to look at the heat map real quickly, you let me know. I try to keep these real snappy. But anyway, financials was up, healthcare was up, utilities was basically flat, but still up on the day. XLE was down, of course. Energy, of course, was down. Staples were down, but some individual names that we've been looking at were doing quite well and held up pretty well. In fact, I just wanted to call out Campbell's again. I think they were up. Oh, no, they dumped on that. Was it CAG? Yeah, CAG did well on that. It was 0.82%. And we've been talking about that a lot on the channel. It's not a real sexy play, but it's been a great place to start accumulating. So I'm even looking for getting a few more shares there. And then, of course, real estate we need to talk about because I've been watching IYR for a breakout. It didn't quite continue on that today, but it held up very nicely. It was down 0.07%, and that's great on a hot PPI day, like I said. And so, yeah, let's now go to some of the mega cap tech. I don't always do this section, but I thought it was really interesting today, and it'll play into the forecast when we start talking about it. But QQQ absolutely ripped today on this, a 3.38% day specifically on news, right? That's a really great situation. But things like Microsoft didn't participate. I mean, it was down a whole lot more. And we're going to talk about that one because this was really compelling to me. personally, and I started adding a few additional plays on top of this when we hit this point, and we'll get to what it is. Maybe some of you know what happened down at 384, but in the context of what I'm talking about now with QQQ ripping, but the mega caps, Meta didn't participate. Of course, it came off of its lows, but it's had some pretty brutal days. Microsoft didn't actually participate. The cloud names in general, the expanded tech software sector ETF didn't actually participate. It was down 0.72. And that kind of shows you where the market is. It's essentially semis. That was who was ripping. And so when you see that, it should tell you something, two things. One, what's the actual theme that's driving this market? And like I said, it's semis and beta, recovery names did a lot of the heavy lifting. But it matters because when Microsoft and Meta start to participate, and even Google, Google was up at 1% here, and Apple, I think, was 1.4%, something like that. They've been, and Amazon, it was also up 1.4%. They've been down considerably, and they were not squeezing. This was just essentially basing here, although I really do like this engulfing candle there, or maybe it's not truly, but I really like this as a sweet reversal signal here for me, especially at a fib, two different fibs, a 50% retracement and a previous breakout. And we can go through that if you guys want to see some trades on Amazon, but look at this setup here. Not financial advice, but I really do like it here. In fact, I've taken a few trades on Amazon, cash secured puts below it. But my point is in this section of the video with mega cap tech and how it relates to the indices is that when they start to participate, I could really see the indices starting to actually move. So for me, I want to position for a real leg higher in the indices once I see them recapture, and I'm probably now getting into the forecast, recapture the 20. But my point is that when things like Meta and Microsoft start participating truly, you could see how much juice they'll have to this market, except maybe it'll be a true rotation where, SMH starts to pull back and we actually get into some of the beaten down software names. And as a result, SPY doesn't go a whole lot higher because there's something I actually want to make you guys all aware of, and we'll talk about that. So now let's and that'll be in the forecast section. Great. So that's enough of the mega cap tech check. So now let's talk about the trade setup check-in. So a while ago, you guys may have known, it was one of my first videos. I run a website called Alpha Harmonic where we plan trades out, meaning you can plan your trade from start to finish instead of just like doing a journal or algo trading. You can actually sit there and work on your thesis and mark out levels and factor residualization, all of that kind of stuff that you do at a quant desk. And one of the first videos I did was planning out a hood trade on Alpha Harmonic. And today we closed that for quite a bit of profit on some of our options because it had been pulling its weight. We identified it back here when the PDT rules were changing, and then the Trump accounts came live somewhere back here. And they announced they would do it beforehand. So this one really flew off the handle here. But I also want to talk about how these pivot points really help. And so we've talked about them before, but one of the reasons that we took profit was we hit this upper pivot point here. And that was enough for us to call it and say we're good on the profit on this one. So let me know again if you'd want to see a video on how those pivot works, how those pivot points work. But they're great places to make decisions. In fact, you can actually see if we look at the QQQ today. Yeah, it's still going though in the after. Let me pull it up on SPY. Sorry, QQQ was that actual squeeze. SPY closing right at the end of the day on that upper pivot. And we also would have taken profits had we been in that. But moving on to some of the other trades, and I'll stop talking about pivots if you guys don't want to hear about it. So please do leave a comment. No one's actually commented on that, so I'll continue to talk about it until nobody else is interested. So Microsoft is fascinating here. We've been talking about this. We've done some other videos on the channel, some Wyckoff analysis on what this accumulation zone is pointing out to us, a failed breakout attempt, and what that could mean. And a lot of people are worried because you fall below 400 here. And I want to point out something really important here, which you may have noticed happened. Everybody thought this was the Trump tweet right here. But if we go down to the 1 minute, not to get real nerdy, but I'm watching algorithms run all day while this stuff is happening. The actual situation happened at least in Microsoft, happened right here. This bar. You may not have seen this bar if you weren't watching Microsoft, and so sorry that I'm not rattling off my written script anymore. Right here, we had a huge jump in volume, And then we started getting some crazy gappy energy going on there. And what happened was that was 385. We had that marked out, of course. And I'll show you what happened on the weekly. But we got this huge first rejection candle. We dip below it, liquidity sweep for it, another liquidity sweep, and we hit this right here, and then Trump's tweet. Or Truth Social, but Microsoft was catching something right before that. And if you guys all know what it was, it's on the weekly. And we've talked about this before. Buying mega cap tech on a weekly 200 simple moving average has been a really great technique for a lot of investors over the years. And Microsoft is no different with that. And what's really interesting there is, we noticed a lot of institutional buying on it at the bottom of the March lows into April. And we had crossed below that 200 SMA, which is when we started doing some plays and rode them up. Since people have gotten crushed on the way back down. But it's really interesting. So this is a breakout retest of that 200 SMA. And right at that moment that I just pointed out to you, that's when that happened. And then thereafter with the tweet, we started retracing. And here's actually when the news caught a bid, we mapped out the fibs from there. And then when we came back down in and were able to hold the 50 on it, we knew that news was positively affecting it. Probably also the fact that we had hit the 200 SMA on the weekly. So this was compelling for us to add some more shares to some leverage versions of this. So again, this is not financial advice, but sometimes when you're doing overlays, it's really nice to trade the Direction has daily bull share 2x share ETFs, and adding to this at this point in a different account is really good. Also selling some cash secured puts was another great move here, but that's for larger accounts. So again, not financial advice, but I just wanted to point that out because this was a really great if you were taking actually intraday swing trades or scalps, or you wanted to start a swing trade, this was a wonderful position to do so for it. And we've been covering this quite a bit here. And then also Meta had a similar compelling move here, but that was not based on the 200 weekly moving average. That was purely based on the news, but Meta's had quite a rough day there. But those were really the only two trades that I wanted to talk about was Hood and Microsoft, because we've been watching them closely. But IGV, since we're actually talking about it at the moment as it relates to Microsoft and ServiceNow, a lot of people have been asking about, and Hood, this held one of the moving averages we were talking about yesterday. It held the 50 on the daily, like to a T. I mean, look at this. And it's one of the reasons that we use simple moving averages. This dashed line right here is the 50 EMA. And a lot of people like to use exponential moving averages, but on the daily, I like to stick to the tried and tested. And you can actually see that the way they react is a whole lot cleaner, if you will, than the exponential. And a lot of people just use those. The 50 exponential on the 15-minute is really helpful if you were actually an intraday scalper or day trading on those. I'd like it for that reason. That is one of the reasons that I do have that on, but I don't always have that on. I just wanted to show you because some people commented on that from my video from yesterday. So anyway, let's talk about the forecast. And this is where I think, there's a bit of nuance that really matters. And the reason we were able to shift here was that the reason we were able to get in on the shift personally, why we took a trade, and let me show you, was on the ES. And we talked about this yesterday. We, always pointing out the divergences, particularly after a lot of pullbacks. And so on the 4-hour here, let me get it to most recently. And I really like to watch what's going on the futures here, because they continue trading a little bit longer and start a little bit more. The real reason you're using futures, right? Not just to hedge your book. But we saw the 4-hour divergence right here, and we called that out yesterday. It's generally a really great place to be getting in. However, it's not without pain. If you were to get in right here, which is what we had called, that is a really steep divergence. So it's a really great, compelling thing. You still would have had to deal with this liquidity sweep right there. And that scares a lot of people when you're dealing with futures because of how leveraged they are. But if you had gotten in on a second divergence, this is where it becomes really strong. But a lot of times these are not as visible, and it takes a lot more guts to get in on these names. Right here, you wouldn't have had to deal with that. There was other confluences here that were quite nice. This regression channel is an interesting read, but I haven't done a video on how to set those up. but personally, we were in from 2 or 3 days ago. So there was near-term pain for that. And now what I'd like to point out, though, is that we are getting rejected off of the 4-hour 200 SMA. So that's a really interesting line to be looking at. And we've come back into, when these crossed over, we've come back into that region. So I expect some near-term volatility right there. And if we look on the daily, actually, let's go back over to SPY and continue with what's going on here. And I will. But before I do that, just 1 second. Another statistical phenomenon. I know people were liking these. Every time you hit 500 point demarcations on the SPY, or the MES or the ES, the S&P 500 on the futures, in general, we tend to range for a while. So if you go back and you look what happened between like 600 and 650, 650, 700, we tend to oscillate for a while. In fact, let me see. Yeah, right here when we got up to 700, down to 650, something like that. These tend to be, it's like to a T there, 650 up to, we crossed over to 700, and we oscillated within this for months. I'm not saying that same thing is going to happen here. I think there's a lot of other catalysts going on, and we pulled back very hard, very fast on the daily, which is a great sign. And we've actually caught a bid over here at the 50. The simple moving average, which was another reason why, that 4-hour divergence was a great signal here. But my point is, I'm not expecting us to straight rip, because that it tends to chop between those 500 point ranges. And so then let's go back and look at the SPY here and talk about some of the candle ranges, because I know people enjoy the candles a lot more as a way to look at where we're going to go in the near term. And we talked about this yesterday, but this wick that happened on, what was that, on Tuesday now? Thursday, Wednesday, Tuesday. And then yesterday we sold back after that. And today we took it back. We're still just ranging in this area. And this is one of those great places where people tend to YOLO into things only to get sold out, because we now have, in many views, a lower high. And so when you have a lower high going on, maybe we've now confirmed this downtrend. And that is something you've needed. And the other part about that is a lower high can also be up here. And so you have to be very careful in this. And these are why these are very range bound. For me personally, what I'm looking to happen is to get back above the 20 daily moving average on the weekly, the 20 simple moving average on the daily, before I get back in as far as long momentum trading. And that's for me personally. At the moment, I'm looking to be, as I mentioned before, I'm more interested in the laggards and the recovery stories right here than chasing the highest beta longs directionally into the simple moving averages, because I assume it's going to be some resistance at some point there. So my personal read's this, if SPY and QQQ truly recapture that 20-day moving average, hold it, and mega cap tech participation broadens, like I was talking about, then I can get much more interested in a real leg higher. And if QQQ loses today's midpoint, Microsoft stays weak, and oil starts reversing higher again, because I do expect that not to just completely revert and fall off a cliff. It's going to take a while for oil to digest some of this move. So if oil starts reversing higher again, or just kind of caps out there, then today may have been more of a headline squeeze than a durable breakout. So I do want to watch some of those levels. Let me know if you guys want me to do chart analysis at the end of the day in preparation for the next day. I've just been giving the forecast to keep these videos brief, but we can mark out the levels and then look at the pivot points and see where things will be going, not on oil, on SPYI and QQQQ. So that's your market recap for today. Huge thanks to everybody who's been watching, commenting, liking, and subscribing. It really, really helps with the channel, and also helps me know which trades, tickers, and market mechanics you want me to keep covering. Please do leave some comments about which tickers. I've only shown a few trades, and one reason is because this week was so jacked up with everything. Oh, and of course, tomorrow's SpaceX IPO. So please be safe out there. One trade we're watching is NASA, so we can participate, because that's the only one where we've closed a lot of other names that were single names based on their specifics. This, we're looking at the entire sector, and we hope to be able to use some of the market structure from this in order to play SpaceX, because this is already holding it. But aside from that, we didn't give a lot of trade ideas for this week, just because of all of the information that we were getting. And now, as we saw, there was actually some geopolitical headlines. So starting next week, we're going to do 2 or 3 trade ideas at the end of every session, or check in on those, maybe both. Let me know in the comments how many you'd like to see. And then, of course, over the weekend, we're going to go through a few. And if you guys are really interested, please let me know. I'm going to do a run through of alphaharmonic.io where you can look at how to plan these trades. But of course, we don't have to do that. Just let me know. Thanks again, everybody, for subscribing. Really appreciate it. Happy trading out there. Stay safe, manage your risk, and I'll catch you tomorrow.